How you doing? I'm going to answer a few of your questions that you guys submitted, and I will put the responses into your curriculum. Also, I will text you guys. So don't forget if you want to get notifications when we meet for class, things like that, text the word options to the phone number 87948. So today's been an interesting day. If you're watching close to the time I'm making this video, you'll know that the market pretty much took a major dip today. How do I feel about this decline in the market? I'm going to say that I see it as a buying opportunity. This is where your conviction is really going to be tested. When you buy a stock, as I mentioned in class, you got to know why you're buying it. Because if you don't know why you're buying it, then what's going to happen is you're going to sell it as soon as things get difficult. And apparently, what's happened here is that Trump has put extra 100% tariff on China imports. So he's got export controls on critical software, and that led to a 900-point drop in the market. And a lot of your tech companies got hit the hardest. Mega caps lost almost $1 trillion. Wow, that's so crazy. 770 billion in value, which is a pretty massive drop, biggest since April. China's retaliating against the U.S. with new port fees and new charges on American ships. Rare earths, these rare earth companies. There was a rare earth metals company that I bought into. I forgot what it was called, but the government took a stake in it. So I think stock like that, for whatever reason, went up. I guess because Trump says that China is holding the world captive with strong, strict controls on rare earths. So this is a trade war, and this could get worse. And the reason the market overreacted or reacted so strongly is because there's a belief that this could actually spiral into something worse than what it is. I'm looking at it now. I'm going to just say that I'm not really sure if this is worth sort of freaking out about. But I can tell you this, if you know in class, I've been telling you guys this day was coming. I've been mentioning to you pretty regularly that when you were making all that money before, that it was really important for you to ensure that you were looking at what they call protective puts in your portfolio. And so hopefully those puts have been put in place, and those puts, they're not going to make you rich. The puts are not going to keep you from getting a little bit wet financially, meaning losing some money, but they can minimize the damage. And if you don't have your puts yet, it may not be too late to buy them, but they're going to be much more expensive. And so preparation really is the key to success when it comes to investing. Now, the first question is from Lee Jackson. He says, several times you mentioned that you made hundreds of thousands of dollars in the options market as being income producing investments to help defray monthly expenses. You mentioned that you had a mortgage as one of your monthly expenses. So my question is, if a person could afford to pay off their mortgage, should they do so? Not all the time. It all depends on uh, keeping debt. Paying off debt is not always the best financial solution. Sometimes you want to leave debt on the books if you have a good use for that capital. So if I have a mortgage and I'm paying say 4% on the mortgage, but I'm making 20% on that money that I could be using to pay off the mortgage, then I should keep actually making the 20% and then using that 20% to pay off the interest and then making a profit. That's how businesses operate. Most major companies have debt on the books. Elon Musk has tens of billions of dollars in debt, even though he could probably pay all of it off if he wanted to. But you borrow because you don't want. Sometimes you want to do things with other people's money. So not paying off the debt is a way to do that.